A very good morning to everyone who's present here. I'd like to thank each and every one of you for joining us this morning for the technical session titled Bridging the Credit Gap for Nano Entrepreneurs. It is my pleasure to invite the esteemed panel for the session. The session is co-curated in partnership with Michael and Susan Dell Foundation. The session shall be moderated by Rahil Rangwala, Director, India Programs, MSDF, and the panelists include Puneet Gupta, co-founder Kaleidofin, Hardika Shah, CEO Kinara Capital, Govind Singh, MD and CEO Utkarsh SFB, and Pravash Das, the MD and CEO of Arthan Finance. We look forward to an insightful discussion. With this, I would like to hand over the charge to Mr. Rahil Rangwala. The floor is yours.
Thank you, Anusha, and thank you to the Access team for organizing this. I'm very excited about being on this stage with this esteemed panel. We have an interesting range of panelists from, fintech players, small finance bank, NBFC, and all of these are seasoned entrepreneurs and have been in the sector now for a very long time. So I'm excited to sort of hear what they're going to say and talk about when we go into the details of this discussion. I think everybody knows that out of the 63 million MSMEs in this country, 95% of those are micro. And the latest credit report that came out, the MSME credit report, talked about 6.8 lakh crores in the year 1920 being allocated from a credit perspective to MSMEs. And out of that, just 1.16 lakh crores was allocated to micro. So you can sort of see the disparity even in the credit access to just the micro segment. And when you kind of break down what this micro segment consists of, which is a very large part of MSME, you have this small nano entrepreneur, typically 10 lakhs to 1 CR turnover. These are your neighborhood kirana stores, your retail shops, your mom and pop manufacturing units. These nano entrepreneurs are even more credit starved because it's always easier to write a larger check. Ticket size, it's always easier to do someone who's more in the formal sector as opposed to the informal sector. So I'm curious to sort of turn to this panel and find out from them, what would it take to change this, and how can we enable faster and accelerate the access to credit for this very credit-starved cohort. Today on my panel, we have Puneet Gupta, who's a co-founder of Kaleidofin, Hardika Shah, CEO of Kinara Capital, Govind Singh, who's the MD and CEO of Utkarsh Small Finance Bank, and Pravash Das, who is the MD and CEO of Arthan Finance. So how we will structure this discussion today is that we will do quick introductions. I will ask each of the panelists to quickly talk a little bit about themselves and the organization they represent, and then we'll really dive into sort of the meaty discussion, and hopefully we'll also have time for questions from the audience. So Hardika, without further ado, if you'd like to get us started, that'd be great.
Sure. Thank you so much, Rahil. As Rahil mentioned, I'm the founder and CEO of Kinara Capital. Our mission is to transform lives, livelihoods, and local economies by providing unsecured business loans to micro entrepreneurs. And to do this, we have built a digital lending solution that processes loans fast, and we provide loans in the range of 1 to 30 lakhs. So right in that segment, that 95% of the MSMEs that do not have access or sufficient access to capital, that is the segment we're addressing across manufacturing, training, and services. We have disbursed over 2,500 crores across 70,000 loans. And we have done this with a high-touch, high-tech model with a distribution of across 110 branches in 6 states, but our entire decisioning model is automated and hands-free. Specifically for women entrepreneurs, which is a personal goal of mine, we have created the Har Vikas program, where we promote women entrepreneurship because we need more women micro enterprises and certainly need more access to capital for them. And we do that in a combination of a discounted loan program plus business planning and services. And under this program, we have funded over 5,000 women entrepreneurs from our base of about 50,000 customers in total. So that's a very quick synopsis. And I'm really looking forward to sharing thoughts with the rest of my panelists who have I have a lot to learn from them too.
Thank you, Hardika. Puneet, would you like to go next?
Thanks, Rahil. I'm Puneet. I'm the co-founder of Kaleidofin. Kaleidofin is a neobank which works towards ensuring that people have access to their real-life goals by providing them a combination of intuitive and tailored financial services. The idea for us was that customers need access to many financial services, especially when you look at an informal sector customer. Just having access to one product doesn't get them to their goals. The idea was to be able to make sure that rather than customers dealing with different financial services, which don't seem very easily interconnected, or customers don't necessarily see how it's relevant to them immediately, how can you actually unpackage them for them in a construct which is easy for them to understand? So we create product bundles that work for customers. Again, our focus has been to make sure that there is better product development. So we use a lot of technology to be able to understand what are the requirements of the customers, and then try to create new solutions that work with it. We've done this for savings, insurance, and now we're trying to focus a lot on the entire credit piece. We have a credit scoring model called Score, which has already been used to give out over 5,500 crores of loans. These loans have been underwritten by our partners. So we actually work with the entities who are already engaged with the customers on the ground. We don't intend to replicate the outreach that our partners already have. Today, through the 40 partners that we have access to over 14 million customers, and that's basically what has gotten us to this scale so quickly. The idea largely for us, like I said, has been to see if we can start to innovate on creating better products and therefore a much better customer experience through what Kaleidofin has to offer.
Thank you, Puneet. Govind, I request you to go next.
Yeah, thanks, Rahil. So I'm Govind Singh. I represent Utkarsh Small Finance Bank. It's a small finance bank based out of Varanasi. That is our headquarters. We started as an NBFC MFI in year 2009, so it's 12 years plus now. And after becoming bank, not only we do microfinance, but we are doing into affordable housing and enterprise loans. I mean, where we focus on below 50 lakh loans. I mean, you can say 5 to 50 lakh is our sweet spot as far as MSME is concerned. So the DNA of the institution is little different than you can say mainstream established bank, where we actually understand this segment of customers. Maybe started from microfinance, but we also understand the next level. I think we always talk about missing middle. I think it's actually missing even today also. So we work a lot on that part. And from the way our thought process is that after JLG, this is the biggest segment we intend to look at. And currently we have more than 600 branches across 21 states and union territories. And this segment is of you can say very specific interest for us. The DNA of the institution is to deal with this type of this segment of customers. Maybe we'll talk a little more about what are the challenges we have faced and how we can overcome. We can talk a little more, but this is one of the very focused, and the way SFBs have been created by the Reserve Bank of India also. This needs to be our focus area. We can't say this is not our focus area. Obviously, as a bank, we really do need to do diversified portfolio. We can't say I'll do a single product. We have multiple products now that will keep happening, but this remains one of our focused product as far as Utkarsh as a small finance bank is concerned. Thank you.
Thanks, Govind. Yeah, I definitely will come back on some of the challenges because I think everyone in the audience would also like to hear not only about the challenges, but how we can address them and what you guys are doing, each one individually in different ways. So I'll definitely come back to that. Pravash, over to you to just do an introduction.
Thanks, Rahil. I am the co-founder and CEO of Earthen Finance. So Earthen Finance is primarily a fintech NBFC and which focuses delivering the various types of loan products currently to the self-employed segments in the tier 1 and tier 2, tier 3 type of cities. So the focus is always on the customer segment, and as a strategy, we wanted to be physically present in central and eastern part of the country where the credit gap is really high, and most of these customers do not get adequate credit and appropriate time. We have three distinct and hybrid distribution model. One is the smart branches. Currently, we are present in Orissa and Maharashtra with 13 number of branches. And we are planning to, if you draw a parallel line between Maharashtra and Orissa, whatever states comes in between, we will be expanding to those states in a year or two. And the second thing what we look at is the partnerships. So we have done partnerships with local MFIs, and we upscale their group loan customers to individual loans with all the supports and all we provide to them. And the third one, what we focus is on the supply chain piece. So here we give loans from 1,000 rupees to 20 lakhs rupees, and these are the instant credit which is available to the small businesses. So use lot of data, alternate data, and AI and ML based algos to reduce the judgmental approach in the loan assessment. Although we have the branches, but the entire processing happens digitally. So starting from sourcing till the underwriting, disbursements, repayments. So everything is digital. We are a cashless as well as paperless organizations. So I mean, started 2019, but unfortunately this COVID put a stop in the growth. But till date, we have disbursed around 50 crores, and have a very good panel here to have a very fruitful and enriching discussions. Thank you.
Thank you, Pravash. And I just have to also thank each of the panelists. I mean, I've given instructions that we should be brief, and you guys have kept it really brief. So thank you so much. We're ahead on time, so that rarely happens. So you're making my job as a moderator very easy. So before we kind of dive into sort of the meat of this discussion, I would actually like to turn it to our audience and ask them the first question and just get a sense of how they think about this question. So if someone in the Access team can run the first poll, I think the first question is, what do you see is the biggest challenge of providing credit to nano entrepreneurs? So Anusha, are you running that poll right now?
Yeah, we are launching it. Just give us like 2 seconds. It will come on the screen. Sure. So the poll is displaying on the screen. The results will be there in 1 minute, and then I'll put that on your chat.
Great. Thank you. So I don't know if the panelists can see the poll, but I will sort of just read out the options in the poll, which is option A is, one of the big challenges, cost of acquiring and serving this customer. Option B is just the lack of data to underwrite this customer. C is just a low risk appetite amongst NBFCs, banks, investors, people who actually are the source of capital for players like yourselves. Option D is inadequate policy support for this segment. Do we feel like that is also something that, and then I've given a catch-all option because as I was making this list, it's such a long list, is other. So while we wait to hear from our audience, I would give you guys the option, and look, you guys don't have to answer in A, B, C, D, or E, but what do you see as the biggest challenges? Harika, I'll start with you.
Well, I was going to say all of the above.
No, but biggest, all of the above. I'm going to force you to try and prioritize. So how do you think, look, that is true. I think all of these are problems, and maybe the answer is all of the above, but what's the nuance behind that?
Look, I think that one thing that is really changing now with the whole India stack and the digital infrastructure that has been activated across the nation the last several years, that lack of information, or at least lack of any information, is no longer the challenge, right? There is gap of information still, but perhaps lack of information is lesser of a challenge. So I'm going backwards to your list here.
Sure, that's fine.
I do think that that in spite of the work that we continue to do, and everybody here and MSDF has been really catalytic in funding so much of this over the years, in trying to establish that micro enterprises and especially unsecured micro enterprises are just as good a risk. There isn't enough of a groundswell to want to fund this at the level and scale that is required. So I do feel that is something that we should collectively as an ecosystem really need to look at as to why, after all of these proof points, we remain somewhat averse to this asset class. And then, the regulatory framework, especially in recent times, has not at all making this in any way easy, especially for last mile NBFCs, mid-market NBFCs, to really continue, the work that we're trying to do. So those are my 2-3 things. I'll let the other panelists jump in. I'm sure they all have their experiences and maybe a different priority or stack ranking of your choices.
Sure, or you expand on the other. Govind, would you like to go next?
Yeah, sure, Rahil. So for me, because I'm also seeing this, this segment, this sector for a long time, not only from my own experience with Utkarsh, but even earlier as a banker also with State Bank, with Axis and with ICICI Bank also. So for me, the foremost thing is there is a mindset issue, in fact, and especially because, if you see even today, it is these smaller NBFCs or NBFCs who are operating this space. We are not talking to large scale, banks who are there, who have been there for hundreds of years, in fact, but the mindset is completely different. So if I get a, if I get a file of 1 crore rupee, I'll jump on that file. But there is no jumping on a file if it is for 3 lakh, 4 lakh, 5 lakh rupees. See, if you're working on a very niche segment, then it becomes a little different. But the moment are talking about established large bouquet of products, they don't prioritize this segment. So that is the biggest thing. And secondly, and mindset also come from the requirement of collateral. You talk to any banker, in fact, the conventional banker I'm talking. So without collateral, funding becomes really difficult for them, and especially the moment they look at this segment, because they will have limited means, they will have less security offer, and even their cash flow may not be that organized. So I think people have been wary of this segment. Though it's not exact example, but I think MFI space, people have done a good job. If you see during last 10-12 years, maybe rather last 2 decades, things have actually streamlined there, and it's a very sizable business now. We are talking of, there may be multiple data points, but at least 2.5 lakh crore is what today outstanding of MFIs put together to this segment. I think similar things should happen, and my sense it would happen going forward from here. But if this is, the mindset is little changed, and what Hardik also mentioned about the policy part. So I'll just touch upon only one part of this. For example, this we are talking URC now. Expecting a guy who is taking 3 lakh loan for the first time in life, I think we can give some leeway to that person. If I can give a roadmap of say 3 years or something like that, the person is not going to go away anywhere. But if I can make his first journey easy, and going to formal financial institutions makes a big difference in his life. In fact, it makes our life also much easier. So my sense is, and the most of these segments are in rural and semi-urban area. I'm not saying in metro it is not there. Metro it is there, but the bigger challenge is going to semi-urban and rural area. One, technology has was a challenge earlier, but now I think it is making life easier. But again, people have a mindset. You talk to established bank, they don't want to go to rural and semi-urban area for lending. They want to have a small, because RBI requires that you should have also unbanked rural centers. People go there, try to get some deposits, but they don't want to lend there. CD ratio of such places is pathetic. It will be single digit, in fact, for those places. So I think we need to have more and more focus on semi-urban and rural area, and more of use of technology. I think that will be helpful going forward. So, but things are certainly changing the way Hardika mentioned. We are seeing a big change during last 3-4 years, especially because of, I think, coming of technology is making the distance is no more that relevant. So certainly yes. The second portion has been a challenge. Even when you are doing an unsecured loan, we still require some type of documentation, which has been a challenge of this segment. Again, we need and we should be open to do at least for an initial period through surrogates. In fact, one is obviously data analytics and using the data part. But even the other surrogates, people have been doing that, but in a very, very small scale. If you are able to use surrogates in a bigger way, this segment will grow from 3 lakh, 4 lakh, 5 lakh type of ticket size to 20 lakh, 25 lakh in at least 5, 7, 10 years time for sure. But what is happening? We are not giving them 3 lakhs. So 30 lakh will never happen. Unless we are able to 3 lakh today, 15 years hence, 13 lakhs will not happen. So I think we need to work more and more surrogates, more and more non-secured base, more and more the expected cash flow of these people. I think we need to look at non-conventional way of dealing with this segment of society. That's my sense.
No, thank you so much. And Puneet, maybe I'll go to you next, and even you, Pravash. I think both of these. I think the surrogates point is a really good one. So, as I ask you the question of what do you think are the biggest challenges, I do know that you both are using surrogate data in a very unconventional way as well. So, Puneet, if you can start, and then Pravash, if you can add to that.
Yeah. Always hard to go after Hardika and Govind, but quickly, to touch on some of these issues. When we started this, and we were kind of doing this for a very long time, we were in the lending space, and one of the biggest constraints that we were facing, Rahil, and I would say that biggest is just a relative term here, was largely speaking that we just didn't have enough models to be able to lend. And creating a model, creating algorithms which could actually help us do this at scale was really complex. To rely on credit managers in a country as large as ours for loan sizes of 2 lakh, 3 lakh rupees is just very challenging. So that was the biggest challenge that we faced. And I think this gets compounded further by something that Govind was kind of hinting towards. And coming back to microfinance, I think it's been a fantastic journey for microfinance, very large scale, but I think it's also a big challenge in a variety of ways. I look at microfinance, like a large banyan tree. It's beautiful, it's great, but doesn't allow anything to kind of grow underneath. And I think the challenge that we face is exactly this. Whenever you try to go beyond the microfinance sector, try to get into lending towards MSMEs, your default rates suddenly get compared to microfinance. Capital providers, lenders are all comparing default rates to microfinance rates. And that just requires very, very strong-willed entrepreneurs to then say that I will deal with this and I will figure out a way to be able to convince everybody to do. I think that's another big challenge which starts to compound out the issue when you start to build this. So the challenge is doubly hard. You need to create models, and you need to create models which are so good that they bring you closer and closer to microfinance rates of defaults, which is, I think, the hard one. Coming to your second question, Rahil, which is around surrogates, I would say that two things are happening. One, like Hardika mentioned, the data itself is improving quite dramatically. So credit files that you start to see, at least there are several customers who have some loan or the other. We've also now been able to see that there is some kind of a usage of a bank account, and with the account aggregator framework coming into picture, some of that information will start to become more and more available. For customers, at least in the Nano Entrepreneurs moving on to MSME space, GST registrations are also available now. So there is some more data which is coming from there, which is formal. So I would say to a certain extent, now surrogates are only required to fill in the blanks here. There, I would say, Rahil, that we are using less and less of surrogates. We are actually using a lot more of machine learning algorithms to be able to create lookalikes. I think that's become much more powerful for us as opposed to surrogates. And again, given just the very, very large number of occupation types that customers end up taking, to find the right surrogate to get a sense of incomes becomes harder. So lookalike models through machine learning models is kind of very, very interesting.
Yeah, thanks. Pravash?
Thanks, Puneet. See, the way I look at it is there are challenges at both the sides. I mean, the supply side as well as the demand side. So traditionally we are looking at processing the loans basis the cash flow method. Whether, I mean, as Govind said, either you look at as a collateral, or if it is an unsecured loan, you require some of the documents which are primarily not available. So the best way to go about is create different templates and give loans. But that's also not possible because we have 3,000 plus business activities, and also the scales are different. Basis the scale, the products these people keep, the margins are also different, the income levels are also different. So it's a lot of complex process. If you are going to do it in a manual way, so the only thing is you collect all those data points and put that in a model which can help you to come as a alternate scoring methodology or alternate way of assessing the customer. That's one way. The second way is also, there are a lot of problems with getting a trained manpower in these geographies. So most of the time, what people used to do is you send somebody, if the documents are not available, you send somebody who go and collect the information and create those models by putting those informations in a particular manner and all. but somebody needs to understand the entire cash flow, the entire business model, which are not available in the tier 2, tier 3 type of cities. And also, if you go a little down to the rural areas, you don't find anybody who is really capable of doing all those things. So, and also looking at the current scenario, when the technology has emerged a lot, I mean, the geo has certainly changed the entire digital landscape, and lending technology has also evolved over a period of time. Now, a lot of stable APIs are also available to use, or to facilitate the greater user experience and all. So all those things are there so that people in even in these particular segment expect a much better tax, expect adequate finance being offered to them without having sufficient documents. So, many of the fintechs and all, as Puneet was saying, creating a lookalike model, or creating ML-based scoring and all. So those are the things which is there in the market, but people ask me, these are not well tested and all. I mean, you can rely them up to 60%, 70% basically data what you have, but over a period of time these will stabilize, and these models will give accurate results in terms of deciding the LGDs and all. But if you look at the way or the actual requirement of the customers. Let's talk about an example. I mean, for a Kirana store who has nearly 2 lakhs rupees monthly turnover, he doesn't require a 10 lakhs or 15 lakhs rupees loan for a 6 months or 12 months EMIs. He needs something which is very quick, instant. Let's say he wants to purchase few boxes of biscuits, which cost only 15,000 rupees, and he needs that 15,000 rupees then and there, and for let's say 15 days, because his business cycle is for 15 days. So he doesn't come to any formal financial system because he will not get 50,000 rupees loan, and also even if somebody gives that amount, he takes 2 to 3 days time, right? So which creates a lot of issues for him to manage that particular cash flow. So being a fintech, we what we are doing is we are enabling those type of gaps, basically making the small ticket loans available at the right time with the customer when he exactly wants it, and for the particular days. So those are the things which we're putting efforts to be able to cater to that particular segment. And there are also neo banks. I mean, there are some sectors which are traditionally looked at as a riskier segments. So there are some neo banks who have come, and they are capturing the entire value chain, and de-risking the entire model. So now people in that value chain are getting loans from them, and many of the banks are also keen supporting these neo banks as well as the customers at the other side. So yeah, things are changing, and hopefully in the over next 2 to 3 years, when lot of digital footprints will be available for this set of customers, probably lot of data can be used for giving instant loans, BNPL, and lot more. I mean, revenue-based financing. So all those things can be offered instantly, and also in a hassle-free manner.
Great. No, thanks. I just want to share the results of the survey from the audience. Interestingly, while I'm hearing from the panel that now lack of data and underwriting this customer is becoming less of an issue, as per our audience, that is the highest, which is the largest issue, at coming at 33%. The others are around 22%. So it's interesting to sort of hear from the audience and see a slight divergence on that. But I also wanted to touch on the cost of acquiring and serving this customer, right? I mean, that has also changed. Puneet, you were talking about your partnership model, the number of partners you have. Parash, you as well were talking about. If you guys can just talk a little bit more about the partnership model, or just your approach on acquiring customers, and how that is different, and how that fits into your business model in trying to serve this target segment. Pravash, do you want to start? Or
yep. So, okay. We look at partnership as an efficient channel of acquiring customers, because so we do 2 types of partnerships. One is with the local MFIs, and the second one with the fintechs and with the aggregators. So with the local MFIs, what we do or what we see is, the if somebody is running a small kirana store or a small shop, but he's actually getting funded up to 35,000 rupees or 40,000 rupees, what his wife or his family members gets from the JLG group type of loans. Beyond that, it is actually not possible for him to raise more capital. So what we do is we look at the credit history of those customers with that particular MFI. We provide the entire product stack. We handhold them for 3 to 6 months, depending upon the number of branches they are allocating to us and the geographies and all those things are taken care of. So we handhold for them 3 to 6 months. We also give the entire technology stacks. Starting from sourcing till onboarding and also disbursement, collections. So everything was given to them because we have these mobile-based applications for sourcing, underwriting, and all. The entire collection system is also very digital. So we use QR codes, we use payment links, we use e-nats, Aadhaar based nats, and all those things. So whatever payment digital payments you talk about today available in India, so all those things are packaged and given to them in a comprehensive manner. And we also train them, handhold them for a certain time, so that the good customer, the creamy customer of that particular MFI, that they do not go or migrate from them to the banks or to the cooperative society, but instead they continue getting larger amount of loans from Arthan, and these customers migrate from group to individual lending. So where the customers become happy that they get the adequate funding, and the MFIs they are able to retain those customers with them. The other side, and all those underwriting and all those are done digitally. So it's entirely hassle-free process between the partners and Earthen. The other partnership, what we look at is with the aggregators and also with the fintechs, where we see a lot of data points are available. We consume those data, create algos on those data, and then basis those data points, we decide the loan amount and all, and which is instantly approved. So although it is a small ticket loans, but approved for, let's say, 3 months EMI, 6 months EMI, and we do not go beyond 12 months. So these are the small ticket instant approved loans which is given to this set of customers basis the transactions which is available with us. So these are the two partnerships we do, and we have seen phenomenal increase in terms of customer happiness percent, and also the way these loans are disbursed. It's real instant. So these are the partnerships which you do, and we have seen a good coverage of this particular segment of customers.
Thanks, Pravash. Puneet?
Rahil, similar to Pravash, but some challenges, some kind of differences between what we try to do. The idea of us partnering with many entities on the ground has been very simple, that the network that all of our partners have created are very, very valuable. And irrespective of what you do when you are dealing with the informal sector customer, there needs to be somebody who has a touch point with the customer. That is a very, very significant value that they add. The kind of information that you end up collecting and observing also becomes very different when a person is doing it, as opposed to it being done remotely. So there's a very significant value that our partners add to the ground. What we have followed as a strategy is little bit more, is very close to something like an Intel Insight strategy, which is to say that you are anyway reaching out to your customers. Continue to do that. Kaleidofin can be your partner to be able to help you underwrite better loans, graduate from microfinance loans to individual and MSME loans, as well as add other products like savings and investments to your customer bouquet. So in a variety of ways, anybody who works with us starts to access a full suite of services from us. We have a mobile app which allows us to be able to offer decision-making on the spot. So information goes in, and within under 1 second, you get the information back from Kaleidofin to say that whether the customer should be lent money, what should be the amount. We're able to do risk-based pricing. In fact, we've been able to use models to also behaviorally give inputs on, is this a customer who, let's say, needs many reminders to be able to repay, or you could actually use a much less comprehensive collection strategy for a certain kind of a customer. So we've kind of put all of this together. We've then married this with our own payments solution. Again, partners are free to use it. It allows customers to move from cash-based payments all the time to using all kinds of digital means. A lot of our customers, especially nano entrepreneurs or customers transitioning from microfinance to nano entrepreneurs today, are not able to even set up a UPI hand. They may not have a smartphone, they may not have a working debit card. So we've also created a solution for payments which works for customers who are currently not digital. And all of this information then put together goes into making the model stronger and stronger for the partner. And that helps them to be able to build portfolios. The next thing that we do in terms of our work has been to say that if you're lending using our model, we're actually very happy to put our capital behind it. So we offer to all our partners who are giving out loans to say that if they would want us to participate in these loans by way of risk participation or by way of funding these loans, we're very happy to bring in our balance sheet to be able to do this. But the partner is free to be able to go to any other bank if they have better lines than what we can. Especially for microfinance entities which may have qualifying assets issues, that kind of opens up for entities to be able to do non-qualifying assets on our books, and that allows them to be able to build a relationship with some of these entities. So the idea largely has been to make sure that the first touch customer service happens to our partners. They continue to play the role that they were playing, and we come in and make their decision-making sharper, add more tools that they did not have to their entire process, and make them more and more digitally ready. So that's largely what Kaleidofin has been offering.
I think it's a really innovative model, at least on the risk share component, right? I mean, it sort of puts your money where your mouth is and skin in the game for you, but also opens up more access in terms of capital for the lending entity as well. So that's really interesting. Hartika, I know a lot of what Pravash and Puneet have just talked about is very similar, but you touched upon this sort of high-touch digital, which is what I think I'm hearing the others talk about as well. Is there anything that you wanted to highlight in your model that is unique or different? Because this high-touch digital is different from my understanding of Kinara.
Yeah. I mean, I would say that the partnership structures that we heard about, excuse me, are very definitely innovative, and yet our customer segment, which is this micro enterprise segment, often lives in disjointed places. And so in our universe, we are a lot more ops led in terms of lead generation, and we do get a ton of referrals from our customers for other customers. So there's a huge peer referral process that happens. About 30% of our leads are generated through peer referrals. What we are noticing is that our customer segment is a little bit more online now. I think there's some data from Google that talks about how 180 million Indians are watching YouTube as we speak right this minute, right? So there is a huge number of customers, especially vernacular media and in small bite sizes in different formats are being highly utilized. And we are finding that online lead generation for this segment is now a viable avenue for generating interest. And we are seeing that, with organic as well as inorganic and influencer methods, that we are able to generate a ton of leads online. However, once you get them through the eligibility that they're eligible for a loan, because we do operate in 3,000 PIN codes and we want to stay in those PIN codes, and we find that they're eligible for a loan and they have the opportunity to self-direct the entire customer journey, they somewhere in that KYC and document upload section, because our infrastructure still doesn't make it that smooth, they are able to press the help me button, and a loan officer does show up at their doorstep to assist them to take that process forward. So that's where I believe that where we are today is this blended tech model, where we are giving the customers the opportunity to navigate, to find us and navigate through the loan experience or the loan application process, but recognizing that they will need a little more hand-holding still for a few years to come, as things are yet somewhat informal in terms of information.
No, it's an interesting point because I don't know where I read this, but the vernacular web is one of the fastest growing parts of the internet today.
Yeah.
So it's interesting to see how you are leveraging that as a sourcing mechanism, because your customers, whether we may think they're not going, but they are really online and they have digital footprints. Govind, I want to turn to you because I am interested not in the challenges, but you talked about overcoming obstacles, because you have definitely been in this journey for a very long time. So I'd love to hear a little bit more about overcoming obstacles. And I'll also pose this one question, which we've got from the audience, which is, we're talking about these digital footprints and data and that empowerment, but what about businesses that are just all cash? I mean, that is the reality as well. There are some that are graduating towards that, but what about businesses that are all in cash? How do you do a digital assessment for this segment and a small ticket loan, right? So maybe if you can start with the question on, what are the obstacles that you've overcome and how you've overcome? I think that would be very interesting. And then if you can tackle the second question, and now maybe if someone else on the panel also wants to take the second question, we can come to that.
Yeah, sure. So Rahil, before that, when I hear all the panelists, it's very, very important to understand. Maybe we are looking, we are using lens of our own institution, what we are doing. But the moment you look at the requirement or leave aside the opportunity part, the type of demand is there, the type of requirement that is humongous, in fact, that is huge. So for me, I think it's very, very important. One of the the solution statement will be, it has to be a cluster-based approach. It has to be a localized solution for sure. Because the way Hardika mentioned about the local languages, they become really important. The way things operate in Surat, it doesn't operate in Bhagalpur and Bihar. They're absolutely different. They are, it's like you are operating in two countries the moment you look at the local geography. So I think it's very, very important that, digital has, I think some of the people, as you mentioned, in case of voting meter also, that people told that, digital is not that much. For sure, I think this segment, at least for foreseeable future, digital will have a limited role. Maybe we'll have what we are actually doing in case of digital, and that is my understanding. End-to-end digital will have its own challenges. Then we won't be able to address the entire nation's challenge. We may be doing in some pockets, for sure. We're doing, for example, salaried customers. Today, people are talking of giving early salaries. All those type of things are absolutely fine. The moment I'm talking of a Kirana store in interior of Bihar or interior of Jharkhand, we need to understand that yes, we'll get some data points. Maybe there lead filtering proportion will be there. Some KYC document, some ease may be there, but there has to be physical intervention for sure. Even when Puneet was mentioning that people, especially the lenders and bankers, get worry about this segment, because the moment they say, okay, now PAR is 3%, how to handle this part, and I'll not, I'll stop lending to this segment. If that is the best thing they can do, they'll stop lending to this portion. You have to have a feet on street to handle all these matters also. There, I do understand that the OPEX are certainly going up in the whole process, but let us also accept this fact. In the moment you don't look at, smaller ticket size, whatever is the segment, the cost of operations will certainly go up. And with all due respect, I'm not trying to say that we should charge higher, but I think this segment for 1 to 3% doesn't make a difference. For that person, it's very important to get funding, important to get credit, where it is 12% or 15%, because 3% he can always make up by doing a better job. And when we are talking of larger segment, a crore plus, then even 5 basis point makes a big difference. Not for this segment. So even if there is slightly higher operating cost, this makes a sense, because you have to touch each and every person eligible. If I'm looking only from Utkarsh, suppose I have a 1,000 crore portfolio, I'll be very extremely happy that I have done a good job. I might have done a good job for Utkarsh, but have I done a good job for the geography? If I have chosen Saran district, or if I have chosen, say, Surat district, have I done a good job for Surat district? No. It won't happen unless I have a very cluster-based approach and I have a completely decentralized collections and sourcing and credit mechanism. It won't happen end-to-end. It will happen in some cases. And see what is happening today. We all understand why we say missing middle, because either you require 2 crore rupee loan, at least 10 bankers will come to you by evening. In fact, at least 10 bankers, they will fight. I can give in 5 minutes, I can give 10 minutes, I can give it 7.5, I can give it 7.45. And you are a micro customer, their rate of interest is not an issue, but still we want to give tons of loans to those people. They require 10,000 rupees, 15,000 rupees, 20,000 rupees, maybe below 50,000 rupees. The moment somebody requires 3 lakh rupees, Now we don't have tools today. So I think there's a huge things to be done. Even if I'm able to, in next 5 years, even if I'm able to make one district of this country complete, then I can say that, okay, I have done the complete requirement of this district I met. That's not going to happen. I can assure you this part. So I think it's very important. I mean, whether it's a problem statement or it's a solution statement, we have to use full technology. Digital is the way. It helps in a big way in terms of sourcing customer, understanding customer, but it has a limited role. I'm talking in this segment. The bigger role is that we need to have an interaction with the customer for sure, understand the requirement. See what happens the moment you filter, I get only, because the requirement is huge, the universe is very large, I'll get only 10% of the universe. In fact, I'll still leave 90% of the universe the moment I make those filters. That is what happens. That is what all the algorithms in fact do. So I think it's very important to have a cluster-based approach, it's a decentralized approach, and you need to have your physical teams also in place to do the justice and to meet the goal of overall goal. I can meet my institution goal, but not the national goal or of the district goal I won't be able to meet. And in terms of policy also, as I think we discussed earlier also, Hardik also mentioned, I think there are some, and a lot of people, when we are doing partnership, it is largely not because of tech, but mostly because of funding is not available. So when Prabhas talks to me 35,000 karna hai, it is because people are not getting regular funding. There has to be a mechanism where people are able to get regular funding. I think, I'm not saying RBI, CDB, NABARD have done a lot of work in this, but lot needs to be done. The guarantee funds need to be established for a we can say 5 to 10 years horizon. And we are discuss about this Udyam registration that needs to be given some roadway, and funding needs to be the way they did for microfinance. In fact, one of the reasons why microfinance could grow, obviously there are multiple reasons. Demand was there, people were committed, we had good understanding, scales were possible, but biggest plus was it was a PSL and banks were willing to fund MFIs. In fact, that was the biggest, you can say, turning point in the history of MFI, besides other thing. That needs to happen for MSME or this segment. MSME can be 2 crore rupee MSME also. I'm talking entire thing. SME could also be. But when we're talking of 3 lakh, 5 lakh rupee, the person doesn't have a proper accounting with him or her, and the technology is not 100% supporting. Will require some sort of support there. And it is informal, it is without collateral. I think we need that type of support also from the regulators, from the government of India and those people. So I think these will, there are ground people, who are, the operating teams are there. There are tech teams who are helping us, and there's a government and regular intervention. These all 3 things will happen, and we need to have a very cluster and decentralized approach to address the issues. I think this is what will happen maybe, and it needs to be done for at least a few decades. In fact, it's not going to happen in next 2 or 3 years. We have seen we'll be just, we'll be not even a single-digit % as far as the percentage of the requirement of the people will be met unless we do this for a few decades. In fact, and that's the need of the hour.
No, that's great. So what I'm hearing you say is that, while we talk about digital, this segment, this nano entrepreneur cannot be only serviced digitally. There has to be that physical interaction. And, I'm seeing the other panelists also nod their head. So I'm going to move forward to the next question in the interest of time. What I'd like to spend a little bit of time on, and, Govind, you talked about this a little bit, is that, look, MSME, you can do, 3 crore loan, 2 crore loan also, and it's called MSME. But this segment is slightly different. The 3 lakh, 5 lakh kind of loan, which is a very different type of loan segment. I want to spend some time on your understanding of what this customer is like, what their behaviors are like. And we just ran our audience poll asking what are the most important loan characteristics for this nano entrepreneur, for this nano enterprise. And the options given were size of loan, turnaround time, interest rate, and flexible repayment terms. And the highest from the audience was flexible repayment terms, that's 50%. That is probably the most important thing for this segment. And the second highest was turnaround time. The size of loan and interest rate surprisingly came in at the same. Both of them were at 12.5%. But Pravash, why don't I start with you? What is the unique behavior of this, and how does your product design for that?
Actually, the way I look at this particular segment, the cash flow is fungible. There is no separate books are maintained for the businesses or for the family income and expenses. So if there is a big, spend in the family, that impacts the cash flow of the business, and vice versa also. If somebody has to purchase some, machineries or some equipment in his shop, or in his production unit, that impacts the entire family cash flows also. And the second thing is the inherent fear of doing transactions to the bank accounts. If you not get the data, as we were discussing a lot on the availability of data and making use of those data. So first thing is the data is not available. I mean, if the transaction is not happening, and most of the, and you also highlighted a little before that if the entire the business is running on the cash, right? If the customer do not have the bank accounts, or even if the transactions are not there in the bank statement, and these are the typical segment, I mean, the behavior of the segment which do not have those information. So processing those loans becomes difficult. And they also prioritize the timely credit, or the amount and time more than anything else. So rate of interest and tenor and all those things that comes later, but they require something which is available immediately for them when they require it. And how do they engage with the financial system? Because they don't want to go to any traditional bank where it takes a longer time to process those loans or requires a lot of documents. They call up a local money lender and get these funds available to them immediately. So as a financer or as a lender, how can we make this similar experience available to these type of customers? While we are saying that these are not digitally savvy, or there are they are not this segment is not moved forward on the digital transactions. But if you look at the UPI transactions, I mean, every other sub owners has the QR codes and all, and they receive those transactions because it's simple, and it is also makes the entire life hassle free for those customers. So it's a mix of the things, how it works for the this for this customer segment. And as Govind was saying, most of the things can be not only accredited to the customers or for the matter of the lenders. Lot of importance also comes, or the burden comes on the regulator and the RBIs. So looking, I mean, for an example, the cash flow is not very normal for the small businesses. And the overdue and NPA recognitions for large ticket loans and for the small ticket loans are also same. So these are some of the structural challenges which we need to address. And also there is no unified system of getting those data. We have different KYC related documents and all. You have the CKYC, you have the Aadhaar, you have the Udyam Aadhaar, but there is nothing which is very unified, and where everybody, all the regulated entities can face the data and use those data for their decisioning and all. So this is also one of the critical factor which impacts lending to that this particular segment.
Thank you, Puneet. As a neobank and as a larger fintech kind of platform, you talked about different product design, right? So, and you can't do product design if you don't know your customer. And you were also, and when I think of, the challenge that you have is that you're not directly on the ground either, right? So you are one level above, you're working through partners. So, I guess two levels of this question is, one, how do you understand your customer? And look, I know you've been in this space for a very long time. So even before Kaleidofin, you have a very deep understanding of this customer. So share some of that information, but from a Kaleidofin perspective as well, how do you understand this customer? And then based on the insights that you've built, what is the product offerings that you take to this Nano enterprise?
Right. So Rahil, I think this has been something that panelists talked about multiple number of times, that being close to the customer is really, really critical. And our model truly tries to acknowledge that by saying there is no way we can do this directly. We have to work with the partners who have a touch point with the customer. Again, Govind pointed it out to say that the traditional lacuna of algorithms has been that you put 100 people through and it will pass 3 people. And that doesn't work really at all. So one of the first things that we did was to say that we'll work with partners to make sure that we have an ability to be able to get information from them, be able to learn from them, get the customer feedback there. It also puts all of the implications that the partners want to keep on themselves on us. For example, they don't want a situation with a very, very large number of rejections. They want predictability for the fee staff to come into this particular space so that the origination is happening in a certain fashion. So I think that entire process of how we start to working with partners helps us continue to get that kind of information on an ongoing basis. In fact, some of our partners, as they start engaging with us, start to modify their loan application forms to be able to bring in information which are more predictive than the standard forms that used to be, and progressively we start to capture some of these. The second thing that we've done is use of, again, vernacular in a big way. In fact, for example, what we've done is when we have a kind of a gap in understanding the customer, we sometimes do telephonic surveys with the customer. Some of these could be done by an IVR, but the big thing that we've done is, for example, in parts of UP and Bihar, I will not call a customer in Hindi. I would actually call them in Bhojpuri or Marathi. And the response rates that we get on yes or no answers, or the response rate that they give to our call center, is just humongously different. And that actually helps us fill in the blanks when it comes to create lookalike models and again strengthen our understanding of the customer. So that basically gets a lot of the information in. There is also a lot of value in the transaction data that we have. For example, most people don't use all the trade line data that is there in the credit bureau report. But I can tell you, if you look at the credit bureau reports of a customer properly, you start to see which month is the customer more used to borrowing, which is the month where they have defaulted to one or they have taken a new loan from somebody else. There are points that you can start to understand that these are the places or these are the times when the customer has a lower cash flow. And when you marry it with the understanding of the customer's business, you start to predict that this was the business cycle and this is what it is doing. And the thing is, power of technology allows this to be done at scale. So that already starts to influence a lot of our products. What we're able to offer on the ground, though, is again a conversation with our partners. One is you can create a very, very flexible product. And the second is it always has a behavioral impact on the customer. So if you create flexibility in loan repayments, what kind of a flexibility will you allow so that it is a flexibility to the customer? It's just not the fact that you have gone one row behind in terms of the order of payment. You don't want the customer to pay to a competitor. You want the customer to be able to get the benefit of the flexibility as opposed to you being second. So there is always this entire issue of behavior. So what we are always trying to do in our product construct is to identify variables which tell us that this is a customer who needs flexibility. This is the max semblance of flexibility that is required. I touched upon on the fact that we work also on a collection matrix for a customer, that what kind of a collection matrix works. And then it becomes open to the partner to say that what is it that they are comfortable in doing with their own processes to be able to take to the customer. So that's typically
your collection matrix is what, like the frequency with which you would do collections, daily, monthly, weekly, or is it more than that?
So part of it is that, Rahil, but a part of it is something very different. For example, for some customers, we can say that we will switch this customer to a purely digital payment. A loan officer will not get in touch. We will only do a voice reminder to this customer and the payment will come digitally. We know that this customer will do. There are some customers to whom we know that not just kind of sending them an IVR is not going to be sufficient. They will need to be nudged a couple of times for them to be able to make the payment. They will likely fail, but they will pay the next time when you call them after the failure has happened. With some, we know that a loan officer has to show up, otherwise they will just not pay. So we kind of create a kind of a hierarchy of how do you now spend your operational cost to make sure that you still have the least cost, when we know that some customers will require a loan officer to show up. So that's basically how we start to work on the processes to make it flexible. And again, customers who are in the first category where just a reminder is sufficient, you now know that for those customers, you are able to create things which are much more flexible. There is no behavioral issue of if you're not there, you will automatically go second in. So those are kind of aspects that we're always working with our partners to make sure that that's how the product design works. And therefore, we've not created a product which I would say that works for all 20 of my partners. Each product that we create is actually co-created with the partner to say, this is how we're going to take it to ground. These are the kind of flexibility that we'll offer. This is how we're going to structure the product parameters.
Great. Govind, you were, in your earlier response, you were also talking about the interest rate is not a very important characteristic, right? There are other things that are more important. And at least from the audience poll that we're getting, flexible repayment terms is the largest. The thing that I was a little surprised by is the size of the loan is not showing up as a very important characteristic. And maybe this is my ignorance, but my understanding has always been that there's always a bias to a larger ticket size, and this customer does want some of that. So I'd love to understand from you if, one, do you agree with that or disagree with that? And then as Utkarsh, are you guys able to provide for this flexibility for this customer, and how do you guys go about doing it, if at all?
Yeah, sure. Yeah. So the way I think Puneet and Prabhash has also mentioned, I think the type of characteristics they have mentioned about the customer, those are exactly there. So the customer doesn't have any collateral. The customer doesn't have any proper accounting, and these two basic things. But the biggest thing, what Puneet also mentioned, the uncertainty of business, in fact. But I think people are talking only of uncertainty of business. Actually, his entire life is uncertain. I'm talking a person who requires 2 lakh rupee loan. In not only the business uncertainty, but even the health uncertainty. Suppose tomorrow he's ill for 7 days, his store will be closed. In fact, his shop will remain closed. He may not go for his, even work also, because it is so much dependent upon this person. So I think his biggest challenge is the uncertainty. And, you like it or not, the biggest challenge of a banker is that they don't require any uncertainty. They always want everything to be certain. That's the biggest challenge of a banker. कोई bank से बात करेंगे आप, they will say कि certain होना चाहिए. Even if it is lower end, but it should be certain. And that creates a big challenge. But the biggest plus of this segment of customer, I must tell you to the entire audience, is that they are the most committed people I have come across. I mean, especially I'm on field for last 12 years. They are the most committed. They are the most focused people, and they are very sharp. I mean, they may not be sharp in all aspects of life, but whatever they are doing, it's a kirana store or it's a even small other activity, whatever they are doing, they are so sharp about their business, and they understand the finance very well. They may not understand which equity they should participate in, but about their own finances, they understand this very well. So I think, so they are very focused. They have a lot of positives. Unfortunately, even at Utkarsh also, we don't have the type of flexibility was Puneet is mentioning. I think that is very much required. We need to work on that. We don't have that level of flexibility today. We do have some flexibility where people can repay a little later, or they have flexibility. As a banker, we have one product where we can give maximum flexibility, that is CC or OD products, in fact, which we had started some time back. I think that is one product which normally bankers can give. Normally NBFCs is a little difficult. I think if bankers are able to give them a CC or OD limit, I think that gives maximum flexibility to that person. The person can deposit whenever the person wants, and whenever he wants to withdraw, he can withdraw. But everyone cannot give. I think for me, it is the biggest flexibility that we can give. Obviously, in term loans also, we should give some more flexibility, which needs to happen. But uncertainty is the biggest thing, and that's why people are talking of flexibility. And that certainly, yes, if you're able to address that part, besides some regulatory and other issues, I think 90% of the things are done as far as ease of business is concerned. Obviously, then we have to go to ground and do this actually, but that will actually help in a big way.
No, I think that's actually it's a great point. Like the CC and
can
OD
I just
product.
jump in
Yeah,
here?
please go ahead, Hardik.
I agree that the flexibility is in such high demand for the various reasons that Govind and others have mentioned. But here is the fundamental problem that we face, right? In order for us to provide a flexible product, we also need our bankers, our lenders to be able to understand that, right? So when we talk about book debts, if it is a flexible product, people don't want those loans. When we talk about, they can pay anytime they go, anytime they want, and all of a sudden the risk profile is shifting for the same customer. We are trying to lower the risk by giving the flexibility, but the lenders and bankers think of it as higher risk when we give that flexibility. So what ends up happening is a little bit of a domino effect, right? You have NBFCs like us, and here we are talking about people who are so passionate about wanting to serve the micro entrepreneurs by providing unsecured business loans. And already you're taking the, so to say, the harder path, and then everything behind you is pushing constantly against it. There are some battles you end up having to pick, and sometimes going with a more standardized EMIs based product and working with the customer to help him understand that ends up being the path you take. Otherwise, you can't do securitization, you can't do direct assignment, you can't do book debt. Just all of it sort of topples around you. So flexibility, it's not just customer flexibility. If we really commit to this idea of giving flexible products to the customer, we have to commit to the idea of changing the ecosystem for accepting the flexible products all the way through.
That's right. No, that's very, 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 very true. And I think, Govind has the advantage of being an SFB to be able to not have to deal with some of those challenges that an NBFC like you has to deal with, because your investors, your creditors at the end of the day will not accept that. So that's very true. And change has to happen at many layers for this to actually affect the end customer that we are talking about. But before I move to the next question, Harthika, on this point of understanding the customer a little bit. When you look at the sort of the business loan and the individual loan or the MSME or nano entrepreneur lending market, financial inclusion kind of started from microfinance. A lot of what we're talking about has grown from there. In fact, this panel has a lot of people with roots in microfinance, and microfinance was 98% female-oriented market. And as we move here, it's completely the flip, right? And that's for many reasons. But you do have a product which is called Her Vikas. And what is different about the female entrepreneur? And what do you see as sort of the unique challenges she faces? And how does your product and how does your model try to address for that?
Yes. Well, so first of all, when you look at, let's just unpack this a little bit, right? When you talk about micro enterprises, one of the first challenges we talked about is unsecured lending is required, because this segment doesn't actually have that, land property collateral to offer, or at least 2/3 of this segment does not have land or property collateral to offer. But when you start looking further and you say, okay, well, let's look at women entrepreneurs, I would say probably 75 to 80%, if not higher, of women entrepreneurs have no land or property collateral to offer, because women just don't have those assets in their name. So already they are disadvantaged from access to capital that's like the very first level of access to capital. They just don't have the property to pledge. Second part is that we have not, I think one of the things that was great and is great about the microfinance model is how we address the women in the model as an equal partner, and we treated them as core to the business. Whereas here, we all accept that small businesses are largely men run. In this nation, 95%, or maybe at least 90% of small businesses are men run. And therefore, we do nothing to address what we perceive as a smaller problem. But actually, it's a bigger problem, because we need to bring more women into this, small business entrepreneurship. They are entrepreneurs. They are just more informal, more home-based, more disadvantaged, and therefore they will never move up that ladder of MSMEs, because there is no pathway created. So the second part of that is, and I would love for Govind to tell me, I know his roots are far more in financial inclusion, but he did mention he came from the big banks. I have female entrepreneurs who literally tell me that they have gone to banks, and the first question a bank will ask is, okay, well, where's your husband? Who's going to co-sign this loan? Or your brother or your father. And even if they're the ones running the business, they're being asked to bring a male to the table to do co-sign. And then you create this, barrier, an additional barrier that prevents women from even thinking of starting or thinking of promoting their business, or pushing to move out of the home-based business and into a more, semi-formal or formal business setup. So when we start unpacking what we have noticed, and this is why our Her Vikas program, by the way, 15% of our book is women entrepreneurs for this very reason. We're trying to beat the odds. But one of the is to basically built all the processes around this where we are treating them as equal. We're not asking for these egregious add-ons that perhaps some banks might. We're not asking for land or property collateral anyway, so that automatically opens it up. And then we're also bolting on additional services that are offered to everybody, but we are creating or curating especially for women entrepreneurs, a little business networking sessions in person. Now, the benefit I have is I have created an inclusive organization internally. 50% of my management team is women. So when we do have these sessions and our management team, our leadership team shows up to participate and help these women think about business planning, think about where they want to take their businesses, how do they aspire to the next level, it becomes real for them. And we see that progression happening ever so slowly, where they want to take on the next big challenge in a way and in a manner that has not been provided to them usually in another forum. So that's how our Her Vikas program is structured. The discounted loan is just a kicker to get us started, but it's the rest of it that makes it meaningful for our women entrepreneurs.
No, thanks, Harthika. And look, I think it's a complex thing to unpack as you kind of laid out, but at least the very low-hanging fruit. Go on, I'll let you speak as well. If there's any banker who's listening or paying attention to this and asking for, bring your husband or bring your son, just rethink your process right now. So that's really an easy low-hanging fruit that's solved for that. Go in, please, if you want to add to that.
Yeah, the only thing, Harthika, you're absolutely right. And, maybe sometimes it becomes geography specific also, but whatever is the social structure is there that creates different type of challenges. And we face that across. So for example, we may have around, not a large number, but around 6,000 of who are our joint liability customers for a long time. And then now they have matured loans of 1 to 3 lakh, in fact. They all are women. We all also try to promote women, and you mentioned 51% of our management. We are finding it difficult to get in places like Varanasi, who can be our women. I'm talking the top level in management. So that has been a challenge. Even hiring, women for our field operations has been a challenge. After a lot of struggle, we are around 12 or 13% of women employees in the institution. The moment you go to Bihar, UP, Chhattisgarh, Jharkhand, belt, things are really different. For employees as well as for the clients, it is difficult. So my sense is, it is taking much longer time, and it still take very, very long time to ensure that for this segment, because we have seen that the moment even in case of JLG loan, there's a lot of temptation by the male member. If it is a bigger loan, it should be taken in his name. In fact, that is what is also happening at the field. But I think there are efforts, and if you really ask me, there are challenges from the social structure angle. But if you really ask me, in this segment, I'm talking of 1 to 3 lakh, 5 lakhs type of things. Women are most preferred clients for us. We have seen, again, I mentioned about this segment is very focused, and the type of passion they have got, the type of focus they have got. The moment we talk of women, it is 2x of men. In fact, in the same segment, their focus is much more than and the men folk. I think there are majority right in this panel also, where there are men who are in majority. But I've seen that part, especially in the segment we are talking of. The women which talks of that her next generation should get a better education, they should be better off in life. She does all the sacrifice, she does all the work, in fact. Yeah, so I think she's much better client and much better borrower than a male folk, for sure. So, but I think there are challenges in doing that part. We are, doing that slowly.
Couldn't agree more. And we're like 2 minutes from time, but we just ran one last poll, which was with the audience, is that should nano enterprise be a distinct category within MSME, really from a policy perspective? And it's overwhelming 2/3 saying yes, nano does deserve to be its own category. Any quick reactions from the panel on that? Like quick, because we are like 1 minute away. And how do you think that can be an important? Govind, I'll defer to you on this one.
Yes. No, it must be, in fact. The only thing is there should be a regulatory framework which helps us. As I mentioned, for example, Udyam registration. If you make it mandatory, then no one will be able to achieve those targets. It should be, it must be, in fact. So from my side, it must be. There should be some regulatory, guidance or some flexibility in that aspect. Otherwise, it must be.
Wait, Pravash, you wanted to...
I mean, Rahil, I would just say, right, we are at the same juncture as we were with MFI several years ago. And we have now definitely established that this priority sector lending, the nano entrepreneurs, are a distinct group and we should look at them from a policy, regulatory, compliance, all perspectives, as a distinct group. So it's time to have a new Mulligam view of this.
Great. No, that's it. Pravash, you had your hand up.
Yeah, so basically, there are 2-3 things which I wanted to highlight. One, anyway, Hardika has already spoken about, the PSL has to continue for these small ticket lenders, currently it's a time bound, but unlike that, it has to continue for some more time so that the entire inclusion will happen. The second one also, there are a lot of things which is made available to the banks like SARFAESI and all, which are restricted to the NBFCs, and up to 20 lakhs rupees only, and beyond 20 lakhs only you can go and do the SARFAESI. But whereas most of the NBFCs give 3-4 lakhs rupees secured loans, right? How do they get those recovery done quickly and in a faster way? That is also has to be taken care of. And also the credit guarantee schemes for the smaller loans, which is still not available. All these loans are and also the entire process is not hassle free. So to go for a credit guarantee, then you have to send accounts, you have to get the approvals, and also when you go and invoke the guarantee, also it is a cumbersome process. So how can you make those both guaranteeing and invoking process very, very simple, and also for the small ticket loans? That will definitely help to create a larger inclusion for this set of customers.
Thanks, Pravash. We're a little over time, so unfortunately, I would love to ask so many more questions, and there were a few more questions from the audience as well, which we never got into. First of all, just thank you very much to this panel. I truly enjoyed myself moderating this discussion. You definitely made my job easy. Appreciate you guys taking time to participate today. And Access for organizing this. I've taken copious notes. I thought I would do a summary, but I'm running out of time. But to me, like the headline is, this nano entrepreneur segment is definitely credit stuff. And overwhelmingly that, in Hardika's word, the time has come to recognize this segment as a distinct segment. And if we really want to make a meaningful change, policy, and at many levels in the ecosystem, behavior needs to change. It cannot just be the ones on the ground. And then Govind, your point, and even I think, Puneet, your point, India is not an homogenous, like you need to think about Bihar, and even Bihar is a country, UP is a country, like you can't assume it's always going to be Hindi. So be close to your customer, design your products, understanding your customer, and then this customer is very unique. And as you're approaching this problem, don't forget the gender perspective, because even women are a very large part of this. And you have to think about their needs, which are different, and their constraints, which are even more different than sort of the male customers that you have. Again, thank you so much to everybody. And again, Access, thank you for organizing this and having me on your panel today. Thanks, everyone.
Thank you. Thank you very much, Rahul.
Thank you.
Bye, guys.
Thank you so much, panelists, for a very interesting discussion. And I'm so sorry, I think we ran out of time towards the end. There were questions from the audiences, and there were one more poll. I think we have sent the results of that as well, but it's fine. A special thank you to Rahil Rangwala for his excellent moderation of the panel. For everyone who has joined us online, please stay put. We'll be back in 5 minutes and resume the session, which is a role of guarantees in bridging the unaddressed credit need. And panelists, thank you once again for taking time out of your busy schedule.